Hi, everybody. Confirm while I'm changing the slides that you hear my voice and you see my screen. That would be great. So that way we can get started immediately. I am resetting my screen as I speak, so we can start with the proper set of slides now that it's 9:30 a.m. Eastern time in the US, New York time. So we are now ready to get started. So in the chat box, if you could, with a very quick yes or no or hi, could you please write it down? Then I would know that you hear me well, and therefore we are ready to get started. Very good. Wonderful. Thank you so much, everybody. And let's get started straight into the session. As I always say, let's begin with the least exciting part of the day, which is our disclaimer. So let's get it out of the way. It's obviously important content, but what's coming after is what's going to be the most important part of today. So let's begin. Disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method or of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we got the disclaimer out of the way. Switch one more time, switching from the slide to I want to talk about a couple of things here by using a few websites before we start with our trading platform. So let me switch my screen very quickly so you get to see what I have prepared for you here. Okay, so you're going to see it on the screen in just a second. Okay, you're about to see it on the screen. Here we go. So what you see in front of you is our website, www.tradewithufos.com. And the reason why I would like to start the session by just pointing at a couple of things you can find in the website is just so you know where to find the tools that you need. The one tool I would like to point at is the guide section. When you look at our website, there is a very, very important section, is the guide. And if you have been watching some of the prior sessions that we have done before, probably you remember that the guide comes in two different formats. It comes in PDF format, which you could certainly download and even print or read on your computer screen. And you have it here where it says, I love reading manuals, okay? And here in the blue section, you have manual for TradeStation 9.5 and also the user guide for TradeStation 10. So you could certainly download those files and here's your guide. But maybe reading manuals is not for you and you are not a fan of reading manuals. Well, we have produced the content of the manuals in the form of videos that you can see here in the bottom part of my screen, where you have the legal considerations, the what does this app do, the ready to access and use this app, okay, which is very important because you need to have your TradeStation ready for it. We receive in a regular basis emails from our users that may not see the UFOs correctly on the daily time frame, for example, or may have a problem with TradeStation running slow, things like that. You know, all those little things to prepare your TradeStation so you know your TradeStation is ready for the app is found in this video, and it's very important for you to watch, just like components and settings, or very important calibrating. Okay, so make sure you watch all of this. Some of you have been in the sessions with us before, so this is nothing new for you, but if you haven't been in the sessions before, this is very important material, or if you have been in the sessions but you didn't put time into looking at those user guides and manuals and all those things, it's going to make a difference. The better you understand your tools, the more efficient you will be, okay? So make sure you spend a little bit of time. Those videos are quite short, 9 minutes and a half. This one, no, 9 minutes and 50 seconds, sorry. This one here is 7 minutes and 49 seconds. So it's not like they are too long. And as I said, it would make a difference. So first comment of the day, please watch the guide. It's going to help you significantly. Second question that we receive all the time is, okay, how do I get access to the app? I have TradeStation. How can I have the app inside TradeStation? Okay, so how do you do it? You just launch the App Store of TradeStation. I'm gonna give you the URL here on the screen. So let me see if I can do this. In a second, you should be able to see on the screen the URL I'm using, which is tradestation.tradingappstore.com. And what you would do on the search box on the top, you just type AutoUFOs, okay? The moment you type AutoUFOs and you click search, you will now be returned this link with AutoUFOs, okay? So when you click either free trials or subscribe, it will ask you for your username and password in TradeStation. And the moment you do that, you log in the website with your TradeStation username and password. Automatically, this app now would be available inside your TradeStation. If you go for the free trial, of course, as the name suggests, it's free, and it lasts for 8 days. If you subscribe, then it's forever, and now you are having this monthly payment of $89. Okay. Good. And the last comment I would like to make as well, again, as I was saying before, it's all about using the tool properly, which implies understanding better how the tool is being used. So the next page I'm sharing with you here is our Facebook page. And the reason why I am sharing the Facebook page with you is because our users are posting a collection of examples that you would find available in here. And those examples can be very, very good and very powerful for multiple reasons. Some of the reasons could be for you to understand what the tool could do for you. Other reasons could be to give you some trade ideas of things that you may have thought of or you may not have thought about yet. And, again, it could make a difference, again, one more time, when it comes to understanding the tool and taking advantage of the tool. Okay, so let's take a look at this example here that we have with the euro. This is an example that was posted yesterday, and you can see the user here. If I click on the chart, it's gonna give me a bigger picture of the chart. Here we go, it's coming. So the user identified the euro currency pair in this case that was in a 60-minute time frame, as you can see. Even though the user was looking at the trend, the user had identified the trend in the 240-minute time frame to be an uptrend, and therefore this particular trader wanted to join the trend, and of course the timing is the key. So what that user was doing is using the green UFO, and the trade was executed at that price with a target being the opposing red UFO, and the trade ended up successful. Obviously not every trade will be successful, this is trading. But these examples could, as I said, make a difference for you to understand certain things that you could be doing, certain things that other traders, other users of the app are doing, and this, as I said, could make a difference for you. Okay, so here's another example. This one was, I believe, from the day before. Let me load this example, which is loaded on my screen. Here we go. And in this example, that was uploaded on December 10, so I think it's 2 days ago. So this was a trade that was taken after the NASDAQ broke the high of the prior day. The trader wanted to trade in the opposite direction, but waited for this red UFO to form. And the moment this red UFO formed with this green candle, which is the retracement inside the red UFO, the trade was taken to the short side. And as the NASDAQ was falling, well, a profit was being made. as you can see on the screen. So again, for example, here, that could be a trade idea. Maybe it's a valid trade idea for you, given your trading style, if you trade intraday in this case, where you look at the prior day high or the prior day low, and when price goes in, goes beyond, you kind of conclude that that market went too far and too fast, and probably changes direction. But instead of guessing it's going to change direction, this trader waited for the red UFO to form, which is the evidence that now you got serious selling entering the market, and most importantly, leaving sell on fear dollars behind, and then the trade was taken and a profit was made. Okay, so again, take a look at all those tools. This is a strong recommendation that will help you to understand better how the tools work, and therefore use the tools better yourself. And I am switching screen one more time, because now I am going to get into TradeStation, and now we're going to start conducting, if you wish, our session by using the charts. Okay, good. So let's get organized. Okay, so let's get organized as we begin the day, because I just started the session, and as I started the session, I just I gave you this little explanation about the website, the guide, etc., etc., and I didn't even say a proper hi to all of you. So hi to all of you. How are you, my friends? It's great to see you. Let's get organized in today's session. What I would like to ask you all to do is to have questions that you may have, and trades that you may be exploring or looking for or planning, or trades that you have taken. All those questions and trades to be taken, or trades that you have taken already, all those questions, it would be great if, as we progress during the day, you were to post everything on the chat panel, if you wish. So as you post things on the chat panels, no one will see it but me. So what's going to happen is that I'm going to take your questions one at a time, show it in the stream one at a time, and I will give you answers to all your questions. Okay, and that way we can be very well organized, and not to skip questions, and at the same time not to be too overwhelming if you guys type too many questions too fast. Okay, so type your questions. Okay, you don't need to wait until the right time to type. Just go ahead and just type all the questions or trades that you're looking for, or interests that you may have, or markets you're curious, or you would like to get an opinion, or you would like to see a demonstration of applying the UFOs to that market, and that way we're going to be able to do all of these together. Okay. As we do that as well, I will based on the emails that you have been sending during these weeks, since the last session that we had 1 week ago, I also want to give you some answers, even though you may not have that question today, but many of you have sent several questions, and I would like to give some answers in case you are not here and you're watching this recorded afterwards. So I will give the answers to all of you as well, okay? So I have one question here. Okay, I have one question here. Let me show in stream. This is Vincentius. Okay, so I am showing now your question in the stream, Vincentius. Vincentius said, Jose, is there an example of using the curve before coming to the zone? Okay, so when you say curve, obviously that could apply to many things. As you all know, the AutoUFOs app apply to all trading styles. Okay, now when you mention the term curve, I am guessing that it is likely that you are a student from Online Trading Academy, and therefore you are talking about the concept of curved that is being used in Online Trading Academy, which could be something different for a different trader. But if that's okay, Vincentius, it would be good for me to see that you confirm that point, that when you talk about curve, you're talking about what Online Trading Academy refers to as curve, instead of other concepts that may be available out there, because there are obviously many schools of thought on how to trade, and I just want to make sure I give you an answer which is relevant on how you trade. Yes, perfect. Thank you so much. Thanks for responding. Okay, so here we go. So let's talk about curve. So when you guys use AutoUFOs in the context of a multi-time frame analysis, which is what you are suggesting in this case, well, obviously every time frame would have a different purpose, okay? And for example, let's say you are looking at the S&P, and I'm just going to drop to the 5-minute time frame. Let's say you are looking at the S&P, and you are a short-term trader, and therefore your initial intention would be to enter trades using a lower time frame, right? And maybe that's your 5 minutes. Well, that could be very intelligent to take a trade, around those levels here, because you have on-field orders to buy. But what could be dangerous, though, is that you are doing so where in a higher time frame, for example, the 60-minute time frame, you were to have a red UFO to close, okay, which is not the case. Okay, which is not the case. The next red UFO is quite far. So if the next UFO is quite far in a higher time frame, you would be able to conclude that you are in a good location in the curve, coming back to your question, meaning that there is room for price to move. If you think about it, the higher a time frame, and this applies again to all schools of thought. Okay, this is just common sense, I would say. When you look at a higher time frame and you compare that higher time frame with a lower time frame, what you see in the higher time frame is bigger movements. Okay, so let's go extreme here for a minute. Let's take a look at the monthly time frame of the S&P, for example. And I'm just going to look for a move, any move, whatever move. It's just waiting for data. So we just need to wait for my internet to load the data here. And many times before I do a session, I will clear the cache folder just to have no problems. Okay, so for example, when you look at this move from this green UFO to this red UFO, if you were to measure this move, okay, and I'm just going to use a percentage here, this is a 21% move. 21% move, and it took 14 months. If I was to measure something more or less of the same size, but I was to look at it in a 5-minute time frame, okay, so maybe, for example, this move here from this green UFO, okay, all the way to the red UFO. So, when you look at this move, you are talking about a 1.22% move, and that took 9 hours and 50 minutes. So it's obvious, if you think about what I said before, a higher time frame will produce bigger moves, where a lower time frame will produce lesser moves. And why is that? Well, it's because of the on-field orders. The pile of order needed, the size of a pile of order needed to produce a move of 20+%, it's a bigger pile of order compared to a pile of order capable of producing a 1.20% move. So what I'm trying to say is that, again, coming back to your question, Vincentius, and also the UFOs, if you apply UFOs to a lower time frame, you will find smaller pile of orders that are still on field, capable of producing moves, but the smaller the time frame, the smaller the pile of orders should be, and therefore the smaller the move you will catch, where the higher the time frame, the bigger the pile of order, and therefore the bigger, the greater the power of that pile of order, if you wish, because that pile of order is capable of producing a bigger move because it's a higher time frame. So I just define what you called curve in your question in terms of on-field orders and size of pile of orders, right? So, for example, in this case, you have a pile of order. The green UFO here, it's a pile of order to buy in a 5-minute time frame. Well, if in the 60-minute time frame, which is going to be more powerful because the 60-minute time frame represents a larger pile of order. So you were to have this green UFO, instead of located up here, it was to be located right there where the cursor is. Okay, so let me draw it for you. Let's make up one. So let's say you had a green UFO, a red UFO right here. Okay, well, what would the problem be? The problem is that red UFO, because it's found in a 60-minute time frame, would represent a larger pile of order, and therefore a higher probability of this market not to progress to the upside, or maybe just for a very, very little bit, and then it's going to progress to the downside more aggressively. In other words, you even have, if I was to add one more concept here, you have a decent chance for a trend reversal when you hit a UFO from a higher time frame. And that is when certain schools of thoughts, like for example, your concept about curve, will tell you that you are high or you are low in the curve. Another way to say that is that you are trading close to the end of the move, and there is a low probability for the move to continue, right? So, but this is not the case. Okay, this is not the case. So in this particular case with the S&P in the 5-minute time frame, okay, those green UFOs could certainly be a very good place where to execute a trade, because as you can see, even the red UFO that was there, that was a light red UFO that was traded before already. Well, now it's gone because price has traded deep enough to remove that red UFO. So you could certainly plan a trade using these green UFOs, expecting a pretty large move in price. This trending market that started some time ago. Okay, that started some time ago here, potentially could continue and continue for longer, because the opposing red UFO in the higher time frame is far away. Okay, so that is how you would think about your curve. If you were to use the UFOs, you would simply, you don't really need to think about curves. You just need to plan your trade, and before you execute, look at the larger time frame, and if the rival red UFO, if you are long, or the rival green UFO, if you're short, is far enough, then take the trade. If it's too close and you don't have a proper reward to risk ratio, don't take the trade. Okay. Very good. So next question. Let me get the next question here. Here we go. Actually, that's not a question, it's a trade proposal. I love it, love it. So this is Tolly. How are you, Tolly? Looking at crude oil. So looking at the CLF 19 in a weekly time frame. Okay, so let's go for CLF 19 in a weekly time frame. So loading crude oil on my chart. Okay, again, just a little patience here. Here we go. Switching to the weekly time frame, so it's going to have to load a bunch of data here. And so the question has to do with demand, which is buy on field orders at 49.21 and 50.58, and then 44 and 47. Okay, so I'm guessing that you are asking for my opinion about those zones. So 47. Oh, you are using the non-adjusted chart. I can see that. Okay, so sorry, you're using the adjusted chart. So CLF 19. Let me switch to the other chart. Okay. Okay, so totally you have demand 49 and 50. So my AutoUFOs don't identify that particular demand zone. So I am wondering. Give me a second, guys. I got a little problem with my sound here. Just one second. Okay, I am back. The sound should be fine. So I am not seeing that demand, those buy on field orders, and I am guessing that maybe you're using different parameters on your UFOs. So it would be good if you could share with me what are your parameters, so I can have the same one on my screen. Right now, the inputs I'm using are the standard inputs with 0.5. Maybe you're using something different. So it would be good if you could let me know what are your parameters. And I have another question from you here. So while I'm waiting for this answer, I will get your question on the main screen as well. So you said should you trade with the curve or with the trend? Well, depends on the quality of the level. Yeah, because in the end, if you think about it, based on what I said before, the trend or the curve is kind of the same, isn't it? If the trend is up, but the price is too high, or you don't have quality on-field orders, you don't have a great quantity of on-field orders, then the trend is going to change direction. So it's either the trend is going to change direction because there is no high quality levels, as you said, or because you are too high on the curve, right? Or because you are too low in the curve and then the trend is going to reverse going back up, or because you don't have quality sell on field orders. So if you think about it, in the end, it's different words to represent the same thing. It's all about the on-field orders if you think about it in the end, okay? We just look at it in a different perspective the moment you change the time frame. And most schools of thought, when it comes to trading and investing, they would recommend the use of multiple time frames. And the reason why it's simple, because if you only look at one time frame, you have a partial view of what it is. Okay, so let me get your other question here, because totally now I got your answer. So let me show it on the stream as well so everybody sees it. So you said a 50.18 level is not fresh, but also not traded through. That's why UFO not showing. Well, so let's do this. If I was to activate, I was to use my parameter hide hid UFOs, and I was to make it false. Okay, well, probably now you have the 15.18 level, which is the one you're talking about, okay? So certainly that level was there, a few weeks ago, and it would have not been crazy at all to have taken this trade. And you may be in this trade at the moment, and it would not be wrong at all. Now, taking this trade now would probably be not recommended because, this thing now is so light, isn't it? Actually, if you change those parameters again to hide hid UFOs back to true, okay, then that 50.18 UFO goes away. Why? Because it has been traded very deeply, and therefore potentially had removed the majority of on-field orders that were left waiting to get filled. So they got filled already. Okay, so now in a case like this, and we talked about it a little bit the last week, in a case like this, maybe what you would have done is to have an entry, a stop, and a target 1 and a target 2. And I remember last week we had a good question that we discussed, which is, how to take profits, how to set targets. We talked a little bit about things like that. And one suggestion that we explored was to take some profits out of the table at 1-to-1. Well, in a market like this, with such a strong move down, if you have bought there, I would say that nothing wrong by taking some of the profits out of the table at 1-to-1, and now you would be in a risk-free trade. And potentially now this thing can move up all the way to the red UFO, so you can be in a very, very good trade, which is risk-free if you had taken the trade like 2 weeks ago. But if you are planning to take the trade now, well, then obviously this next green UFO would be the safest bet, because re-entering now is going to be less probability. It doesn't mean it's wrong, but it's going to be a lesser probability of a trade compared to having entered like 2 weeks ago. So good point. 100% agree with you totally on your comment. Okay. And my pleasure, Vincentius, as well, with your answer. And we have supply and demand trader here. So let me show this on the stream. By the way, I want to congratulate you, supply and demand trader, because I remember some of the trades that you shared with us last week. And I believe that at least a few of them ended up profitable. So maybe after I read your question, we'll take a look at those charts. and we'll talk about it. Okay, so I have here, I am using AutoUFOs to rapidly identify opportunities in a number of markets and have just spotted this. Would it be a valid trade? On the US dollar Japanese yen 120-minute chart, so let me load this. US dollar Japanese yen, US dollar Japanese yen, 120-minute chart. Okay, so it's loading. So buy at the green UFO at 112.71. Okay, I see that UFO right here. Okay, right there. And stop below. Okay, like and the target at 113.37. So 113. Okay, I can see what you are trying to do here. 113. Let me put those numbers on the screen. So that way you guys can also take a screenshot of it if you want to, which could be useful to you if you plan to observe or execute that trade yourself. Okay, so I'm just gonna have this 113.37. This is the idea, the trade idea with a take profit target right here. So that would be your take profit. And then when it comes to entries, this would be the selected UFO for entry. Okay, and I would like to talk about if this makes sense or not, which obviously the fact that it's green and it's dark is already making a lot of sense. But I'd like to explore a few more things. And then you were commenting that in case you're wrong and the market goes against you, you will have a stop loss order located at, and you mentioned 122.49, which is gonna be somewhere here. 122.49. Okay, so that would be more or less the trade. Well, to me, it makes a lot of sense because realistically, you have room for the yen to keep moving higher all the way to this red UFO. Okay, but at the same time, I could understand that you see some cluster of trading here, some cluster of trading here. So all of this is low quality. If it was high quality, it would be shown by the UFOs. Actually, I'm pretty positive that if I was to, again, just out of curiosity, I was to turn on the hide hid UFOs, you know, we have stuff there. Okay, we have things going on, especially that one here. So you are taking profits before you reach that price level to avoid any trouble. So to me, that makes a lot of sense. Okay, but let me remove the hid UFOs. So I'll type this true again. So we see the most relevant ones, right? So you do have room for price to go all the way to the top. But you know, as one of our users was posting today or yesterday in our Facebook page, you know, that was the beautiful Euro trade. The user was talking about the concept, take the profits and run. And if this is the philosophy or this is your trading psychology, this is your mentality as a trader, you like those quick profits in and out and then plan for the next trade instead of stay in trades for a very long time. Well, certainly it's a very valid target, okay? Even though if you were to plan to go for the next one, that may happen too. Now, I would like very quickly to take a look at the daily time frame and see what we have. And look at how beautiful this is. Again, now I am mixing your question and proposal, supply and demand trader, which looks good to me. I would like to mix this proposal and question with Vincentius' question when it comes to the higher time frames and the concept of curve that we discussed before, which, you know, we could call anything we want. We also talk about trend. So in other words, if the price comes to where my purple text is, which is a selected area for entry, the question is, is it likely or possible that this market will reach the purple line, which is the take profit target? Is it possible? And certainly yes. Certainly yes, because notice that again, the target line is located before the meat of those sell on field orders, which is the darker run circle within the flying saucer. So this trade certainly seems to be realistic, and this trade where you plan to take the profit and run, it's probably a good idea, because if it goes much higher than 113.37, you may have significant selling kicking in, because you have this darker circle within the flying saucer that, where the market hits that darker circle, and we may have intense selling, which could stop you out or could reduce your profits greatly. So before that happens, take the profit at 113.37. You know what? I think you find a very valid trade here based on those comments. Okay, of course, there are many different types of preferences and valid rules on how to trade. Just to add a little more, the other day we were talking about fibs, right? And we talked about, okay, use a obvious turning point, okay, and project this thing, okay. Well, if you were to do that, you have the 61.8 fib lining up with a green UFO, right? We also said take the obvious turning point in the opposite direction, which is up here, and project this thing to the downside. And if you were to do that, you also have the 23.6 lining up with this green UFO. So is this a risk-free trade? Absolutely not. You could certainly be stopped out. But does it look like what you are thinking makes sense? I would say absolutely yes. And of course we can talk about more rules and more possibilities, but I think that's good enough based on your question and our answer here. So good one. Very good one. What else do we have? Another. Oh, by the way, and before I take your other question, supply and demand trader, you had a very original trade the other day, and I'm calling it original because most of the trades that we explored in the last session and today are what we call directional trades, where you plan to profit by either getting long or getting short and riding a move and profiting from the move. But what about non-directional trading? I remember that last week you were presenting us with one of the trades that you executed. And I would like to go back to the chart of Amazon, and I would like to go back in time to, I believe it was December 4, that was the day you took the trade. We did the session on December 5, so I believe you took the trade the day before, and please correct me if I'm wrong. But basically what you did, actually I think it was one day before. I think it's when the price was up there. Maybe it's December 3. I think so, because I believe you were legging into an iron condor by doing a credit spread with calls first and then a credit spread with puts next. So I remember you were selling options. You were selling a spread here above this red UFO, expecting price not to go through it. And while you were doing that, you were collecting very nice premium, very hefty premium. And then I remember the day we did the session. That was December 5. And in December 5, I remember very well that you were consulting and you were saying, okay, would it make sense now to sell another spread? Sell another spread below the green UFOs, right? Now that the market has dropped intensively, I'm going to be able to collect plenty of premium with the puts, while I collected plenty of premium with the calls when the market was up here, right? And all of these was what you have done. And then you were using the expiration date of December 7. In other words, this is what we call non-directional trading, and basically your bet was that as long as this market stays between the below purple line to the higher purple line, you were not betting on where it's going to go. You were betting on where it's not going to go. So your bet was, as long as the market remains between those lines from now until December 7, those options will fully expire, and therefore all the credit you collected will remain as yours. Okay, so December 7 was that Friday. So on December 7, Sure thing, the market went down to the green UFO, bounced back up, then started moving down, but this is where the market closed. And notice that you never reached that bottom line. You never reached that upper line either. And therefore, the options that you sold expire worthless. Okay, so great application as well. And congratulations on this non-directional trade. And also very good job with the application and the use of the UFOs with the US dollar Japanese yen trade you just shared with us. Okay, so let's take a look at your next question. Now that I wanted to review that opportunity, so let me get that on the stream. I have a next question from you here. Here we go. So I'm sharing now the text of your question on the screen. So you should see that in a sec. So here it says, I am using AutoUFOs to rapidly identify opportunities. Oh, wait a minute. I believe it's the same one. Oh, okay. I see what you're doing. So you had a target one at 113.37, and then a target two at 113.97, and then a target three at 114.97. Okay, got it. So you are really planning on a longer trade here. So let me see your other values, because in this case, I may not fully agree with that one. Again, that would only be my opinion here. Okay, so I am a trader too. So I myself sometimes will have profitable trades, and I myself sometimes will have trades that are not that good. Okay, that's part of trading. So we may agree, we may not agree. Again, in the end, what's most important is the fact that you follow your rules. Okay, but let's take a look at what your rule said. So your rule set target two at 113.97. So you have target one, 113.37, target two, okay, which is the take profit two, is located at 113.97. That's what you have. And you know what? For those two targets, I would agree with you. Even though coming back to the daily time frame, notice how the 97 is now above the daily red UFO. So basically, and that's why I mentioned that I will not agree on this one. Respectfully disagree. But the reason why I said is because now we are expecting price to trade through this dark circle, like the dark circle is not there. So the way I'm thinking about it is the probability of not reacting to this red circle, it's very low. In other words, when this market goes back up and reaches take profit one, maybe a little higher, is going to hit that circle and then fall, and therefore it's going to make it very difficult to reach a target two, and even more your target three. Now, I could understand what you're doing. I could understand that maybe what you're doing is that you are willing to trade this longer time frame trend that may keep going and going for much longer, and I could understand that. And if that's the case, as long as you don't move your stop and you give this thing a lot of wiggle room to breathe, and so then you may be able to achieve target two and even target three, because definitely you're in a trending market, and apart from this red UFO, I don't have any other one. So this market, if this red UFO does not work, this market may really continue going, and therefore you may reach target two and target three. But just be careful there on not moving your stop too soon or having your stops too close to the price of this currency, because remember, the moment you reach this 113.37 target, now you're going to hit that red circle, and now you may start getting in trouble, because these markets start moving down to then continue going up. But that movement to the downside may kick you out. Okay, so that's just my little 2 cents to add to your trade plan, which again, really appreciated that you share with us. It makes this conversation much more rich, and also a great opportunity for newer traders in the room, maybe to go ahead and practice this particular trade if they feel like it. Okay, so why not? So one more comment from you here is that being able to visualize it using UFO made it much easier. Got it. Hear you. Yeah, and one thing that I would like to share with you all, and this is just sharing a little bit of personal experience here, or my own trading psychology, if you wish, is that in one hand, when I started trading myself, I would have this huge, let's call it pride, if you wish. I would have this huge pride for doing certain things manually. And I would draw my zones manually. I would draw my key points in the market manually. I would color code every single line or drawing on my chart. And I would be very proud of doing everything manually, and that would be great. And from in those initial learning stages, it's actually great to do that. But the problem is that then you start developing preferences. And one thing is that you develop trading preferences after 20 years of trading. But the problem is that it doesn't work like that. You may start developing trading preferences. And I'm just noticing that here I have the wrong date. Sorry, guys. Let me update the chart. Yeah, I was still looking at December 7th. Sorry for that. So going back to current date, December 12th. So, I was saying that if you were to develop trading preferences after 25 years of trading in the markets, then those preferences probably make a lot of sense. But when you are a trader who maybe have been trading for, let's say, 2 months or even 2 years, and now you develop trading preferences, and now every time you look at a chart, for whatever reason, when you see these, you are attracted by these because you have developed a trading preference. Well, that may be a problem, because if you have been trading for, let's say, 2 years, the market conditions in 2 years or 2 months or even 3 years, the market conditions in 2 years, could be quite similar. And therefore, the trading preferences that you have identified that are your preferences have a reason to be preferences based on the market conditions that you are used to during 2 years of trading, which is a very short life as a trader. But at the same time, it's unavoidable to develop trading preferences because we are human. And maybe one day you saw an example in a trading article, or maybe you saw an example in a trading book, or maybe someday you saw an example on your trading screen. And because that trade worked well for you, next thing you know, you develop a preference. You would like all your trades to look like that. And the reason why this trade worked maybe was just luck, but in your mind now, you would wish all trades to look like that, right? And you develop those trading preferences, and that could be very problematic because unless you have years and years of trading experience, those preferences may not represent an edge in the marketplace. So something that I realized early in my learning stages is that technology removes all that problem. Having a tool like AutoUFOs, Radar Zones for You, it's beyond the convenience of having it to draw it manually, which is great, but really the real power is not to save some time drawing zones or fall into lazy mode, which is absolutely not the reason for this tool to exist. The key is now that the analysis is performed by an algo that does not have preferences and always plot things following the same method no matter what. Therefore, the information you are displayed is what it is based on the algo and your inputs, and it's always the same no matter what, without preferences. So now you get rid of those preferences, and therefore it not only makes your life easier, as supply and demand supply demand trader is saying, which is true. It saves you time, makes your life easier. I mean, who doesn't like that? I do. But most importantly, you now approach trading in a way that is more mechanical. And that is the way to achieve consistent results, to be mechanical. If your actions depend on your preferences and your preferences change through time, or your actions depend on how you feel today or your mood, and I'm going to the extreme, but hopefully you get my point. So then your trading performance may be hurt. I would go as far as saying that your trading performance would be hurt, right? And so what's the way to overcome all those problems? It's to think less, and it's not about laziness. It's about efficiency, right? And computers do that better than us. Okay, we gotta acknowledge that computers are faster. That they don't think, they don't have emotions, and therefore that's the power. Okay, and therefore, way to go, supply and demand trader, and good job there. I have another question here as well. Here we go. Showing the stream. So here's a question from Vincentius, and talks about the dollar index, the Dixie, And the question is, do you also relate to Dixie for any spot forex trade? And to be honest, you could, but I personally don't, because again, if you add too much information to your trading analysis, you end up with no trades, or you end up with trades that are very frustrating. Because, for example, let's say you want to trade the euro, okay, and let's say you want to trade the euro in a 4-hour time frame. Let's do that. Here we go. Perfect example. So we want to trade the euro in a 4-hour time frame, and the euro just enter a red UFO, right? So maybe in this case, in your mind, you're like, okay, time to short the euro. And as a confirmation, you say, okay, I'm going to do it, but only if the dollar has buy on field orders, because now I got sell on field orders for the euro, and I have buy on field orders for the dollar. And now let's say you load the 4-hour time frame of the dollar, which I am loading as we speak. So a little patience here. It says pending data PD. So let's wait for a second. Pending data. And let's say the dollar index is giving you that beautiful green UFO, while the euro is giving you that beautiful red UFO. So what's going to be your level of confidence to take the trade? Is going to be very, very high. Okay, it's going to be very, very high, because you know you have buy on field orders for the dollar, but you also have sell on field orders for the euro. So you're going to be like, I got, multiple forces pushing in the same direction. This is going to be a very high probability trade. And you know what? It's true. This would be a pretty high probability trade. But what's the problem? The problem is, what if it fails? Which it will happen too, because it's part of trading. Not every trade will always work. There is no system on how to trade. It just doesn't exist, not even for the institutions. There is no system that profits all the time. So what happens to you as a trader now if you were to be stopped out, where in your mind your trading setup was amazing on top of amazing? Well, what's the problem now? Well, now your level of frustration may be very high. You may lose confidence, and then you have a good trade to execute, but then you didn't take it because you lose confidence in the first one. So is it wrong to use those type of confluences? Absolutely not. But in the other hand, you make your life complicated, and what you may get is less trades and sometimes more frustration. So I personally, and again, I'm not saying that this is what everybody should do. I'm just sharing with you me as a trader, if you wish. Okay, based on the question, I could certainly answer that question based on my own experience. Therefore, I talk about myself in this case. As a trader, and myself as a trader, I would not care much, because I prefer to trade more often because I make more money. And then if I get stopped out, I get less frustrated, because it's not like every one of my trades is a perfect trade. I just go for trades that make sense. They don't need to be perfect. And believe me, I am a perfectionist. But the beauty is that learning how to trade teaches you how to be less perfectionist, because if you are too perfectionist, you will execute trades less often. And you will get more frustrated when you lose. So it's better to find this middle ground, this balance, if you wish. And that's why I'm giving you such advice, or sharing with you such thoughts. It's not really an advice, because in the end it's all about your plan. Okay, but that's one way to think about it. Okay, does this make sense, Vincentius? Yeah, I see your response now. So I'm just going to share it here on the screen as well. Thanks for that. And guys, let's do this. Let's also get organized for future sessions, because what we're doing now, I think it's great, and at least from my side, I think it's needed to do what we're doing now, where you guys are sharing questions, and we are providing a level of support and answers and examples, and so all of this is certainly important for us to do, and we should keep doing that. But I would like to also, as we spend time in those sessions, I would like to keep evolving as well, and get deeper and deeper as we spend more time together, as you guys develop more proficiency using the AutoUFOs. I would like to get to the next level. Okay, so here's a proposal I would like to throw to all of you, and please get back to me with your your comments to this proposal, because it doesn't need to be, it's just an idea, which I think could be useful. But if you don't think it's useful, then we'll do something else, okay? But here's an idea. So one thing I have realized throughout the years, and also it was obvious to me last week when we did the session together, and I asked you all, type in the chat box yes or no if you have a trading plan. And the majority of you guys, at least last week, and I'm not saying that's the case, and I don't mean to make anyone feel bad, okay? Please don't get me wrong. I mean to help and assist you and support you in whatever is possible, and take those UFOs to the next level and take your trading to the next level. But the majority of you said no. And the problem with that is that it's simply impossible to be consistent without plans. Because if you don't have a plan, you don't have rules. If you don't have rules, you cannot be consistent in your actions. And if you are not consistent in your actions, the only way to be consistent with results is to be lucky. And all of us understand this is not the way to go. So basically, we all need a plan. But the problem that I found throughout the years with many traders I met throughout the years is that it's very difficult to come up with a plan, in the sense that you don't know which rules to put in the plan. So many traders feel that, let me practice this and let me practice that to see how I feel, to learn a little more. So then I will come up with some sort of an idea on which rules to have. But I don't know which rules to have yet, because I'm still learning. And it's kind of, something that makes a lot of sense that I heard many people say. And so again, in the chat box, guys, if you guys are in that stage where you would want a little more assistance to come up with rules, to come up with a methodology which is a little more, let's call it complete, instead of experimenting, just stopping the experimentation and actually start producing results. If you guys are a little bit in that position, please, and remember, I'm not going to share that on the main screen, so this is going to be confidential between you and I, but it's going to be very useful for me as your presenter, if you wish, the host of the session. Is going to be very useful for me to understand your backgrounds, your needs, to provide support. Out of the last week, I understood you need support in developing a plan and having rules. I would like you to confirm today if you want to do that. Because if you want to do that, what we could do in the next session is that you guys send me an email with the things that you have realized throughout, the years that you have been trading, the month that you have been trading, the weeks that you have been trading, depending on how much experience you have. And you were to share with me the things that you like, the things you don't like, the things you are comfortable with, the things you are not. For example, maybe someone says, I like moving averages. Someone says, I like Fibonacci. Someone says, I like nothing. I like nothing on my chart. Someone says, I like fundamentals. Someone says, I like the Bollinger Band. Someone says, I like candlestick patterns. Someone says, I don't like to use many time frames. So the things that you like, the things you don't like, the things that you feel comfortable, the things you don't feel comfortable, if you were to put all of this in an email and you were to send that, what we could do is that we could structure a few sessions where we could integrate the UFOs within certain things that you feel comfortable with, in a way where we come up with specific plans. And that way I end up helping you to develop a specific methodology on how to trade. And therefore moving, if you are in that situation, moving from that experimental phase where you are trying things to see what works, to having a methodology that is, let's call it complete or finalized, where now you know what to do. And you have the tools, to execute that. So we could certainly spend time doing that too, instead of just going over generic questions. Okay, and then we can take this to the next level. Okay, which is, okay, what about now we put trade together? Okay, we put trades together, and then we can, maybe track them together, plan them together, execute them together. The sky is the limit. We can do many things, but at the same time, all of you here in the room are a different trader. And, all of you need a plan. And based on what I learned last week, I saw clearly that many of you don't have that plan. So please go ahead, guys, and type in the chat box, okay? You guys are open to do this? You guys are interested in doing this? You guys need to do this, or you would rather move in a different direction? And either with a yes or a no, or with a comment, I would like everybody to answer if that's okay. So then I can get, the overall opinion of all of you guys, and therefore I could produce future sessions that, not only keep improving naturally, but also keep improving in the direction of what your needs are. Okay, so I'm seeing your comments and your messages here. Okay, so that's great. Cool. Very good, guys. Very, very good. Cool. So let's do this. Okay, let's do this. It seems that you guys are open and are willing to do this, and obviously I'm here to help as well, and therefore we'll progress in that direction. Okay, guys. So let's do this. Let's give ourselves 1 week time. I will be communicating with you as I always do via emails. We'll be sending emails from rich@tradictive.com. And we'll be communicating with you when it comes to future dates for the next week session. In the meantime, and please don't wait until the day before. In this case, I'm being a little selfish, if that's okay, but I think it's fair to ask. Don't wait until the day before the session next week. Whenever you can, the sooner the better. Just put an email together with things that you have noticed are problematic, things that you have noticed work well with you. Send it to me in a generic form. I will gather all that information, kind of mix and match things and put it together in a way that is useful. So starting next week, we'll be able to start producing sessions to help you to produce, your way on how to enter the market in a way that is robust, organized, rule-based, professional, etc., etc. Okay, and by the way, spread the word. Okay, guys. I'm sure you have traders friends in your community and in your neighborhood. Some of your friends around you that may be struggling with their trading or may not be. Well, if they are, don't keep this to yourself. Okay, just introduce them to what we're doing. Doesn't matter if they're using the UFOs or not. Let them know. Okay, so I'm just typing an email here, tradewithufos.com. Sorry, multitasking sometimes is not so easy. So reach@tradewithufos.com, that would be the email for you to use. Okay, probably you know that email, but just in case you don't, make sure you do that. Okay, and I'm going to take the last question for today. Okay, this is a question from Mark. So 1 second here. So I'm gonna put this question on the main screen as well. So next question is a question from Mark. And Mark is asking about calibration. Okay, so let me have Mark question on the screen, which is going to show up in just a sec. So Mark said, could you go over briefly today what the difference is when you increase the calibration or decrease the calibration? Okay, so very quickly, we have videos before that talk about that. And when we are conducting sessions together here, you will see me use 0.5 all the time, which may not be the best setting, okay, but you will see me use that one. So it's kind of like the standard setting that comes by default. So somehow, it's pretty natural for me to use that one. It's not a bad one, and you know that because of the stats, right? So if I turn the stats on, so it's going to tell you how often this worked. Okay, so 52% in this case, so it's not a bad one, but it could be improved. So that's why probably most of you, by following the user guide, you are doing some calibration and playing with the calibration. So what is the key when you are doing those calibrations? Well, normally what happens is that if you go for smaller values, like let's say 0.2, I'm going to go for an extreme. Notice how those zones became narrower, okay? You may have more zones now, but they're also more narrow. So like everything in life, everything got pros and cons. So what is the pro? Well, the pro is that if you're right, and assuming that your entry is within the zone and your stop is on the white space beyond the zone, then you have less distance from entry to stop because the zones are narrower, so you have less risk. But also because the zones are narrower, the distance from, for example, let me move to the euro, because with the euro we got red and green, so I'll move to the euro. So switching to the euro for our time frame, here we go. So now, if you notice, what happens is that the distance from green to red is that particular distance, but which is a great amount of distance in between the zones. Why? Because the zones are narrower, so you have more room for price to travel between the zones. So what's the beauty of having a small value? Well, the beauty of having a small value is that typically you would have, let's call it better trades from a reward to risk point of view. But what's the problem? Well, the problem is that you also have the zones further away, and therefore it's less likely for price to travel that far. You may have a nice bounce from a zone, but it may not reach the rival UFO. For example, this market may come to the green UFO, bounce, goes very close to the red, but never reach the red and came back, and therefore it doesn't count as a profit because you didn't reach the rival UFO, right? Or sometimes you may even miss trades, okay? And notice how this particular week went very, 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 very low, almost touched the green, but started moving back higher without touching the green. So sometimes you may miss trades or you may miss targets because those UFOs are very narrow. Why? Because your calibration setting is very small. Now, this makes your trades of a higher quality from a reward to risk ratio point of view, but you will lose more often because the distance to travel to the rival UFO is more, and therefore is less likely for you to reach your opposing target. And also the distance to travel from your entry to your stop is less, so you are also more likely to hit your stop, right? If I was to go for, let's say 0.7, well, now I'm going for the other extreme. Well, notice now my UFOs are wider and I have less. So what does that mean? Well, now it means that the probability of reaching my target is higher. Okay, not with the euro because we don't have green, but if we were to find a market with green and red, like for example the euro yen, for example, earlier. So now you would have a higher probability. Well, it was not this time frame, it was the 120. So let me change to the 120. But now you would have a higher probability of reaching your target because the UFOs are wider. So because the UFOs are wider, the rival UFO is nearer. And because it's nearer, it's more likely you will reach the target. Also, the stop is further away because the UFO is wider. The stop, which is normally located on the other side of the UFO, is further away, and therefore you are less likely, okay, you are less likely to hit your stop, and you are more likely to hit your target. So what happens to the probability is higher. Okay, so as a rule of thumb, the higher the number, you increase the percentage of winning trades. The lesser the number, you decrease the percentage of winning trades. But also the lesser the number, you hurt the reward to risk ratio relationship, where the higher the number, you hurt the reward to risk ratio relationship, right? So the midpoint is kind of a sweet spot. Is not good, is not bad. It's just in the midpoint, and you can see the statistic is 58, right? So, maybe you want to go for something a little higher. Okay, if let's say your priority is that you want a little bit of a better number, so maybe you go for 0.6. I don't know, and now you have a little bit of a better calibration. Is that making sense? So there's no right or wrong. Everything are pros and cons. We are not Goldman Sachs, so we don't know exactly where the on-field orders are. That would be great. but we are not. So we play with the odds. That's trading. We play with the odds of orders to be in certain place in the market. And the key is that when you do this assessment, you do it in a way that is mechanical. So the moment you have done your calibration and your calibration adapts to your personality as a trader, meaning that your priority is a higher win-loss ratio, or your priority is more the reward to risk ratio, and therefore you play with those numbers until you get to a point where you're happy with it, okay? So now you basically leave the calibration like that for the rest of your life. Is that making sense? And it doesn't matter which market you trade. You don't need to tweak the calibration. You just leave it like that, because no matter the parameter you use in calibration, it will have pros and cons. So because you calibrated it once and you were happy with what you got, the other thing I said is that now the right thing to be done would be to go back in time to see if this number stays the same or varies too much. So for example, in this case, with the euro yen, in the 120-minute time frame, if you look at December, going back 1,500 bars in time, but now instead of December, let's say I look at August, right? So if I start looking from August and I go left 1,500 bars, starting from August, if I was to do that and my 62% becomes 41%, well, that would be a very bad sign. Is that making sense? That would be a very bad sign. That would mean that this market changes its nature, that the on-field orders are taken out from the institution. It would be a very bad sign. But notice how I went back in time and my stat, it's quite constant. What if instead of August, okay, now I looked at, I don't know, May. I go back 3 months in time and I look again 1,500 bars. Well, again, if that 62 remains between 50 something plus 60 something plus, I'm going to be happy. In this case, 58. Well, it's still pending data, so the number may change the moment the data is loaded. In the upper left, you can see PD in yellow. So here we go. So in the end, it stayed as 58. So 58 to 62, there is not a big difference. It's okay. But what if that number became 35, 41? Well, that would tell you, don't trade this market, because that market got a major seasonality, only works well in those months, but then it doesn't work. Is that making sense? Orders are pulled out from the market, from the institution. So we don't want to do that. But the bottom line is that once you have done your calibration, and let's say you ended up with, you know what, I'm happy with that. What was the number I selected? I think I selected 0.6, right? So let me go back to my inputs. Yeah, 0.6. So let's say you tell me, hey, I'm happy with the 0.6. And I'm going to leave 0.6 for the rest of my life. And the market you trade, you will make sure that you look back in time and you see that number not to vary too much. From the 50s highs to the 60s something, and it stays there. Well, then, you could certainly be a consistent trader in that market, because the stats show you that. If you were to see a market that changes the stats, then you should not trade it just like that. But again, this calibration setting, coming back to your question, Mark, has a lot to do with your personality as a trader. Are you giving priority to the reward to risk ratio of your trades, or are you giving priority to the win-loss ratio of your trades? Okay, that's kind of like the thinking behind it. And that way you make it whatever makes the most sense to you, because in the end, we are all different as traders, okay? For example, in this case, if you use 0.6, you could certainly take this trade. Okay, you could certainly take this trade, but what's your reward to risk ratio? It's like a 1-to-1. From green to red, you have a 1-to-1. Well, if instead of 0.6, you had used 0.5, so that UFO doesn't show up. The one that shows up is the one that supply and demand trader selected. That gives you a much better trade. But also, because the target is further away, the win-loss ratio is less, which, by the way, you can make this better by moving your stop to break even, by having a target one at 1-to-1. So you can make this better too. But if you were not to make this better, 55.27% of the times, every time in this chart, in this time frame with 1,500 bars loaded, every time the market came to a green UFO, it bounced to the red UFO 55.27% of the times that happened. Or every time it went into a red UFO, 55.27% of the times it bounced and reached the rival green UFO. Okay, so all those measurements will help you to fine tune the type of trader you want to be, and then it's all about being disciplined, managing your risk, and you can make the methodology better now by overlaying more rules, which is what we could do starting on next week. Okay, guys? So I'm counting on you to send those emails. Okay, so we can have a powerful session because, I mean, we could do many things, okay? But in order to have the type of session I just described that you guys seem to be happy, I need your emails, okay? Because if I don't get your emails, then, which is obviously absolutely fine, but if I don't get your emails, then I cannot conduct a session devoted to you. I will need to conduct a generic session, and then it will be a different thing, which could still be useful, of course, but I think it would be more useful if we make it more customized to you. I think that would be the real power of it. Okay, so guys, pleasure to spend an hour and 15 minutes with you all. We will see you next week. I will send a reminder email. We will post the new date, the new time on the social media pages, Facebook, LinkedIn, etc. Make sure you are following us in those pages as well, because sometimes we'll have trade examples or announcements of things, and that way you can be updated real time, because emails sometimes are sent with delay, but social media is happening real time. Okay, so that way we are well connected, and please, for sure, send questions, suggestions, comments. We're here to help. So make sure you communicate with us so that way we understand what you need, okay? You guys take care. Thank you for being here today. See you soon. Or send the email and we'll put the rules together. You guys take care. See you soon, my friends. Bye-bye.